Let's start with the highlights of these earnings. You have growth in revenue that was far greater than what was expected by analysts. What was driving those gains in the quarter?
Yeah, good morning. It was certainly clearly a strong quarter, strong results with high income growth, as you said. It's driven by a significant increase in our business volumes, gaining market shares and growing quite nicely within the areas of mortgages, 6% up year on year. All four countries in the Nordics are delivering to that number. And then it's a 8% increase in the lending to SMEs. And finally, asset management increased by 24% to a record high of 387 billion euro. So a very high activity level during quarter, building up volumes, gaining market share, and together with firm cost control, it has led, and low credit loan losses is actually reversals for this quarter. It has led to a strong result.
Let's pick apart that a little bit. You mentioned cost control. What does the cost picture look like going forward? Because you gave an update on what you are expecting costs to look like.
Yeah, we expect to continue to deliver operational efficiency. That is one of our key priorities. We have three key priorities: drive income growth initiatives, create great customer experiences, and increase operational efficiency in the company. And the latter part, that is about keeping a firm hand on the costs and continuously trying to improve the efficiency while we are growing the income line. And that equation will lead to a continued improved cost-income ratio. So that is like the expectations we have for the future.
Okay, and you've also started the application process for your buyback program. Do you have any read on the size of that program?
That we are not disclosing yet. So we have commenced the application process. We intend to start the buyback program in the fourth quarter this year. And that is what we basically tell the market. And then we'll come back when we are having, or when we have the approval, and explain more about size and also how to handle it.
Well, let's speak about that approval, because the ECB has essentially said that when it comes to dividends, it's going to put a cap on excessive payouts. Do you think it's right that the ECB gives a sort of blanket cap, or should they be treating banks according to regions and strength of the capital picture?
When I listen to ECB and have the dialogues with them, then I hear that they are saying that they want to basically handle bank by bank, and that is the way it should be done, in my opinion. And we have in Nordea, we changed our dividend and capital policy in the fall of 2019. And came very strongly into the crisis, strongly both within earnings, but also in capital position. And so we are very well prepared to pay out dividend and also start the buyback program, which we were planning to do already in 19 and early 20. So I welcome the way that ECB is looking at this question.